All right. So let's start over.
Structure. So started with structure.
That's the basic and the advanced market structure. And then we'll move on to liquidity. Then we'll move down to the POI. Right. And this is everything I trade. This is how I trade. This is all I look for before trading. So that's why you see when I say keep it really very simple, keep it simple, keep it stupid simple, this is basically what I mean. And this is how I trade. This is how I trade consistently. This is how I've been trading at, make me a consistently profitable trader. Yeah. We have people that are profitable and we have traders that are consistently profitable. Yeah. To be consistently profitable means you're doing simply means you have a hedge that plays out at least at least a 60% win rate here. Something that you can confidently do over and over. Yeah, something that you can actually go to your chart now and confidently place the trade here. You analyze it and you're not scared or doubtful if the trade will actually go well or not. There is no fear. There's no form of fear. You're just there like, okay, you believe this will actually go well. I mean, you're always applying risk management, of course, but we haven't done risk management. Okay, we'll do that as well. So yeah, but then the simple way I actually trade just gives me this confidence. Yeah, I'm able to, compared to when I used to trade, when I used to be very, very scared of every trade. That confidence wasn't there. You should be like, will this thing actually hold or not? But now it's pretty simple, after simplifying everything, how I trade here, which is just structural liquidity and my POI. There's this confidence I get whenever I want to, jump on each trade here. There's this confidence I get whenever I want to jump on each trade. It's just different from every other trader, which is why I've been able to send my setup to, people, friends, and general, like public here. I've been doing that since February or March of this year. And I've been doing it consistently. And if I'm to calculate how many wins I've had compared to the losses, trust me, I've had over 80% win rate ever since I've been doing it. Live sessions and all that I've had, it's definitely over 80% win rate. Because I remember actually I do send my friend trades. Yeah, I do send my friend trade, and I recall, if I'm not mistaken, we've only taken 2 losses together, 2 or 3 losses together, compared to multiple trades I've actually sent to him. So yeah, that is basically how one thing I'm actually very proud of when it comes to just keeping trading very, very simple like this, structural liquidity and POI. That longevity is there. Yeah? You're able to come back to the market more times and over and over and over and over, compared to when I used to jump to the lower time frames, and then that confidence is not there because you're wondering, what if price comes to this low? What if price comes to this low? What if price, and all kind of stuff here. That kind of, you're not even, you see, your heart, the rate at which price even moves here, yeah, it's kind of like messes up with your psychology and all that. Anyway, let's just move on to today's topic. For today's topic, basically, I just want to put everything together: how you can trade structure, liquidity, and the POI. How you can trade, add everything together to actually form a setup. And we're going to use Euro GBP or GBP US as an example. The first thing is structure, yeah. Basically, we understand that structure. We want to have a structure. It must, take out a previous low. This is a buy structure, yeah. Must sweep the previous low first, then a break of structure, right? That means I have a sweep and a break of this, and that means this low is expected to be protected here. But then that means it's actually a structure, a swing structure. But what validates my own structure? Basically, I want to see this happens first. Then I'll say, okay, since I have two breaks here now, I can now say, okay, this is my structure. Yeah, this is my structure. I have inducement liquidity, I have structural liquidity, and I have this inducement liquidity as well. So in a buy structure, all I'm basically expecting is for price to come back to this lower and then boom. Yeah, so now let's go to the chart example to explain structural liquidity and POR, how you can just put everything together to form a trading setup. Then we'll also work on top-down analysis too. So let's use GBP USD instead. Sorry, let's use GBP USD. So yeah, we said 1.2. Let's just call price back here. All right. I'll cut price really back to this zone. Right. So looking at this structure, we know price was bearish here. But looking at this current structure, what can we all see? Apparently, I can see a sweep of this previous low. And you can see price created. Now, this is where a lot of us make mistakes here. Some probably think this is a break of structure. Of course, that's a break as well. But the major break of structure, right, that is where most of us have problem, yeah. And I don't want to confuse you guys today. I want you guys to really understand this. I'm going to be very simple. But now look at this. Let's say price was bearish. Price was bearish, right? Then price started doing this. Price started doing this. No, that's basically not it. Let's assume price was bearish. Price was bearish here. Now you know this is a swing structure, right? This is a sell swing structure, correct? This is a sell swing structure on its own. Would you tell me that because you see price take out this low and take out this high, you now have a break of structure? Will you tell me that this is now a swing? Well, in a real sense, yeah, this is actually a swing, right? Price has taken out this high, so now, and price also took out this low here. Now you can now anticipate this low. You can say, okay, this low shouldn't be taken out, right? That's a very quick one for a quick trade. But if you want a long-term trade, price will not change to buy to the buy structure until this previous lower high has been taken out. You guys should pay close attention, please. I don't want you guys, to be confused and all that. Because some of you are seeing this guy as a break of structure. Of course it is, but probably you want to take this one as a quick trade. Fine, but this is the main break of structure here. So this guy is our protected low. This is our transactional liquidity. Then you can see what price is doing here. So originally here, what can we all see? We all know that, okay, price has taken out this previous low here, then giving us this leg. Please, I don't want to confuse us. I know some of you are probably confused already, but let me come again. Structure originally here, we know basically price will sweep the previous low in a bullish structure, take out the previous low, break structure here, create another low, then break structure. Cool. Then that will give us our bullish structure. A sweep of the previous low, transactional liquidity, and then we get a reversal. Immediately we start getting reversal, know that okay, this low is expected to be protected, and then we have these, and these are our structural liquidity here. So on a normal day, we expect price to come back to take our structural liquidity and then continue, yeah? Because structural liquidity is used for continuations, obviously. But then how do you determine what if you have series of breaks within? Which of them is your main break of structure? That is where the real swing comes in, right? We have the major swings as well, and we also have, the minor swings. In this case, this is a minor swing, right? We have this sweep and we have this break. In this case, this is a minor swing, but you can say this is your swing structure, right? But if you look at the bigger picture, let's say we'll come to the 4-hour time frame, and that's where it even makes sense to you. This is one reason why most look at the higher time frame. Now, can you see what we have here clearly now? Can you see that this right here is the main break of structure? Can you say this is the break now? Can you say this is the break? Obviously no, yeah? Because this is the obvious high, the previous high that price took out. And then, please take note of what I want to say now. This is pretty much how it works. Let's assume price was bearish. For you to start looking out for buys, that means price must take out the previous lower high. Now, this brings us back to the basic market structure. I told you guys to pay close attention that time and then study it very well, try to understand it. The reason for the highs and lows, higher highs and higher lows, lower highs, is for you to actually understand how it works here. Now, if you don't understand that basics, you won't be able to understand what I'm talking about now and how to identify the real swing structure. The major ones from the minor ones here. You won't be able to identify it. Now, this is where it comes in. You cannot say price is already bullish until price takes out the previous lower high. In a scenario like this, if you have something like this, price might only be creating liquidity to tap into this lower high and sell off. But some people would think price is already bullish here. Look at price was obviously bearish here. But some people, after they see a sweep of this low and a break, they will say, price is already bullish. So what do they want to do? They want to start buying from here. But price only created liquidity. Price only created liquidity for this lower high to hold. Then what will eventually happen? We have this. Please pay close attention to this. So let's assume price didn't take out this main high here, this previous lower high here. Let's assume price didn't take it out and price only took out this high here. Trust me, we would have had this happen. This would have happened instead. But we can all see that this is a clear structure itself, yeah? A clear swing structure. And price took out the previous lower high, which makes it a break of structure, right? Which makes it structural liquidity, transactional liquidity. And if price takes out the transactional liquidity, where is the next stop? Where is the next target? Structural liquidity, right? And this is obviously structural liquidity here. Structural liquidity. Now we have a sweep of this previous low here, which makes this low protected. Then what are we anticipating now? Now we're anticipating that, okay, that means if you have something like this, and this is structure, right? This is structure. If this is structure, so that means that this low will be taken out and price will do what? Continue, right? That makes sense, yeah? So now you can, what is the actual I want to look out for now? Now what comes next? What comes next, yeah? Your POI. Let's use proper stuff, yeah? You have a sweep of this low, of the previous low. Of a sweep of the previous low. You have the main break of structure. That's the major break of structure, yeah? You have that. Then what's the next thing you want to look out for? Structural liquidity within this swing, within this low to where where you started seeing the reversal from, yeah, to this high. Now you already know that, okay, since you have this swing structure, now where's the structural liquidity? That's the next thing you want to look out for. Structural liquidity. Okay, now this is structural liquidity. Now what's the next thing? Remember the arrangement. Where is it? Remember the arrangement. Where is it? GBP. Yeah, remember structure, liquidity, then your POI. Right? Structural liquidity and your POI. Now we've seen our structure, which is this low to this high. We have this break of structure here. We have this structural liquidity as well. We've seen our structure. We've seen our liquidity. Then where's our POI? I showed you guys the QMR, yeah? You can see in this case, this was the last bullish candle. I mean, the last bearish candle before this bullish movement here. This is the last bearish one. This is the last order block that failed. Or could be this one as well, right? Could be this one, or you just mark out everything here. But in case of you understanding QMR, yeah, you know that this was the last bearish candle before this bullish movement, yeah, and that is your POI. Then what do? You have your buy position. That is now your POI. And what comes next? Your entry. What comes next? Your entry. And then your target could be the next high, or your whatever target it is, or the target the next high. Because originally, this is what you are looking out for. A sweep of this low, then a break of the previous high, the previous lower high. Then what? This. Either this type of liquidity. We have two types of structural liquidity. This is the first one, and this is the second one. It happens before the break of structure. If you go back to structural liquidity video, you will see it there, right? So either you have this or you have this, right? Then what do you expect? Boom. Now you have your POI right here. You have your POI, which is, what's the POI? This is the last bearish candle. Okay, it's not even the last bearish candle. Let's assume that, let's say this is the last bearish candle, yeah? That's the last bearish candle, and that's your POI. The last bearish candle before this bullish movement, yeah? That's your POI, your QMR POI, you have your entry there, the stop loss, and your target, whatever it is you want to target want to be, and then that's it. You have your trade entry. Then you wait. Boom. That's it. And your target hits here. Now, if you take a good look at this, say we have this, and this is the break of structure, yeah? Now we can see that our liquidity is right inside the 50%. It's within the 50%, yeah? Inside the 50%. And our POI is very close to it as well. And what validates our POI? Liquidity. Now you can see it. You can see that. Now, why didn't we use this zone instead? Because this is a low. This is like the first low after this 50%. Which is the reason why we didn't use this one as our POI instead, yeah? This is why we consider it our liquidity, because obviously this is the last low. This is a low, but this is also the last low. This is structural liquidity. What's structural liquidity? Structural liquidity is the last low before the main low. And obviously, yeah, this is the last low before this main low here, right? And you can see how we had the trade. Now, the same thing on, let's use Euro GBP. This is Euro GBP. Let's use the... All right, on the 4-hour time frame. Now, on the 4-hour time frame, or did you use 2 or 1? I remember I caught a buy live with you guys last week. Was it 2 weeks ago? Yeah, beginning of the week. Yeah. Now let's look at it. Now this is the interesting part of this stuff here. This is a very, very interesting aspect of trading here, of considering your swing structure. It's a very, very interesting aspect of considering your swing structure. Now you can see, look at something. You can see we have a sweep of this low at this zone here. We have a sweep of this low, of the previous low, and we have a break of, see, this is actually very obvious. Yeah, price took out this previous lower high, right? Or higher high, because this is actually a bullish movement already. Price took out the previous higher high, price took it out, price came down again. Now that means that originally this low is protected, it's expected to be protected, but now we have another one. We have another sweep and another break. Does that make this low protected? So now let's look at the reason why this low won't be protected, why this low is the structural liquidity for this one instead of this one. And let's look at that. Now we have this sweep, we have this break. Let's consider, this is where the money is, right? Now, what did I say? Okay, let us say, now, we should we say this is our PO high? You can see this QMR, right, is not inside the 50%. It's inside the discount zone, right? You can see it's very, very obvious here. It's not inside it. So let's assume this would be, this other block here would be the POI instead. Remember I said your POI must always be inside here, and your liquidity must be either on top of this 50% or below the 50%, right? Now, you can't use this guy because this liquidity is very far away. It is very, very far away. It's not on the 50% and it's not inside it. And this is the only POI that is here because this guy is not also down. So let's now bring this one here now. You can see this structural liquidity here, and this is our PO high. You can see this was a sweep here, and this was the guy that was swept. Now you can see the distance between this guy and this guy here. You can see it's quite very, very close. It's still very, very close. So I'd rather consider this one as my PO high and have price come there instead. On the 4-hour time frame, let's look at it. The 4-hour time frame, let's look at it. On the 4-hour time frame, what do we have? We have another major break here, which confirms that okay, price is bullish, right? But where will price come back to before we have, the continuation of the trade? But where will price come back to? We all, like, the 4-hour time frame says price is bullish already, right? Price is obviously bullish. But where will price come back to? Now, we are not now guessing. At this point, we are not guessing if price will come here or not, if this will be our POI or not. We are not actually guessing, because on a normal day, we could say we have this sweep, we have this break. We could say this is actually our last low. This is our structural liquidity. But price doesn't always have to come to this zone, because we now have another sweep here. We now have another swing structure here. And what do I mean? You could have scenarios like this, where you have something like this. You have this break, then you have price come like this, gives another sweep, another break, another sweep, another break, then this, then this. Could have price do something like this, right? On a normal day, this is supposed to be your last low, which is a structural liquidity. The reason why this will not be a structural liquidity is because you already have this, right? Which makes this low structural liquidity, and price will now do what? Come down here and boom. And let's look at, I hope I'm not actually confusing you guys. Don't worry, you will get it. I will still come back to that. All right. And boom, you have that. Now you are not actually guessing. In a scenario like this, you are not guessing, right? You're not guessing because you're able to tell a story that, okay, look at this on this 1 hour time frame. Aside from this particular sweep, there is no other sweep I can actually say makes sense here. This is not a sweep. It's not a valid sweep because there's no valid break here. It's not a valid break. Price already came back there, did its thing. Price came down here as well. It's a QM hour. Price already came down there as well. Mitigated it. Then we can see this clear sweep. Then price broke out this previous high. It came down again, broke the second high. Now, why are we not using this guy? It's pretty simple. This guy is just too far away from the PO high. I hope I'm actually making sense. I don't want to sound like I'm saying too much, whereas all I'm saying is very, 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 very simple. Right? But let's do this one again. Let's do this one. Look at this sell here. Look at this sell that happened here. This is pretty simple, right? This is what you want to see all the time. You want to see a sweep of the previous high. You want to see a break of structure, right? Then you want to see this again, price breaking structure again. So that means you expect this high to be protected. And this one is now the structural liquidity here. Just simply like this. A sweep of this high, a break of structure. You have this. Then you expect this to happen, right? And in this scenario, you only have an order block as your PO high. You only have an order block as your PO high in this scenario. Now let's look at this. You have from this low to this high, right? Your order block is inside this zone. This one is almost at 50%. So that makes this guy a very nice entry. A sell entry, you cover the high, give it enough space, and then you do a 1 to 3, or whatever target it is you want to target. Whatever it is your target is going to be. The same thing all the time. The same thing every day. And then boom, you have it. Boom, you have it, right? It's pretty much just adding everything together, trying to understand the swing structure, your actual swing structure, your liquidity, and then the entry model. Once you're able to add those three things together, the rest will come easy, right? You're able to merge those things together and understand how the three of them work, then the rest will come easy, which is telling the story. So you don't just, turn to someone who will just see a setup like this and just, jump on it, right? You just trade any setup anyhow, then end up losing money. So now let's tell the story. For the last time, let me give you guys this thing again. For the last time, let's use AUD USD in this case. Let's use AUD USD. The last time. Now we can all see this here. Let's cut price back again. Now we can all see this here. You can see the first thing we wanted to, we look out for was this. Was the sweep of this low, of this high rather, then the break of structure. Now we have another break. So that makes this guy protected. That makes this low the target, right? And what do we have? What's the next thing we want to look out for? Structural liquidity. And this is obviously the structural liquidity here. Look at your Fibonacci 2. It's directly on top of the 50%. And where is your PO high? A PO high, basically, you don't have a QMR because this guy, there's no QMR right above this guy, right? So that means the only POI available is the order block right here. That's the only POI available, and then boom, and then you have this as your entry. then you know your target, whatever target it is you want to have, and you have it. The price come back, of course, and then yes, you have your trade, and that's it. Price came back to the order block, got structural liquidity, and boom. Now, how do you tell a story, right? How do you know which zone to actually trade from here? Now let's get to that. Let's do GBP USD as an example. Now this is top-down analysis. Let's start with the daily time frame. So on the daily time frame, or let's start with the weekly, because I know I tend to look at the weekly time frame to tell my story. So on the weekly time frame, I want to focus on the current swing on each time frame here. The current swing. And how do you know a swing? The swing basically is when I can see an obvious break of structure, obvious transactional liquidity. The obvious ones, I want to focus on that particular one. The obvious one here, you can see sweep, So now what can I see here? I can see this guy. This obvious transactional liquidity. So if price has taken out this low and price is transacting, and I can also see this as well. Look at this. Okay, so if this is happening, what does that tell you? Me, I'm being okay. That means GBP is bearish on the weekly time frame, right? In this scenario here, price reacted from this QM. The price is bearish, right? Because price went to take out this high. That means GBP is bearish. And then originally we all know that price needs to come back to where this zone here. There is money here, right? Price needs to come back to this zone. Okay, that makes sense. And if price is currently inside this zone, that means price is currently in the discount zone, yeah? That means price is currently in the discount zone. Okay, that makes sense. So that means I want to look for buys for price to come back into the zone. Please pay close attention. Please pay close attention to this. Now you're able to see something like this. Although I'm focusing on this current swing, you can see I'm focusing on this guy right here is what I'm focusing on. This guy from here to here, right? I'm focusing on this guy. So able to know that, okay, that means price is coming to this zone. Now, if price is coming to this zone, where is the structural liquidity? Now, what is the structural liquidity? It's the last high before the main high, correct? Now, let's take out this guy. Where is the last high? Can I see any last high? I can see a bunch of highs here. And obviously, this is the last high. It's obviously the last high, right? Before this high. Even though I expect this high to go, but still, this is the last high before this high. So that means I expect price to do this. Since price is bearish, price to come back into this zone and sell. Okay, since I'm expecting that and price is still in the discount zone. Now, on this weekly time frame now, this is my PO high. This is my sell PO high. After all, that's what I'm just anticipating, yeah? That's what I'm anticipating. So that means this is my sell POI. This is, you can see this guy here. That means that's my sell POI. That means this is my sell POI, and this is what I'm anticipating. Okay. Then that means I want to look for buys into that zone. Now, looking at the current zone again, what do I want to look out for again? The same thing. The same thing over and over, right? The same thing. And what's the current zone I can see? What's the current swing I can see here? Because I'm looking for buys. Remember, I already have the anticipation that price is going to buy into this zone, right? I'm already anticipating that price is going to buy into this zone, right? So that means that for me to buy, I must see another swing structure that will actually go into that zone. Now, what am I looking at again? Now, on this same weekly time frame, I can see price created a sweep of this low, Okay. A break of structure. Okay. Now I have this structure here. I have this swing structure. Now this is the weekly time frame. I don't have to bother if there is structural liquidity or not. I don't have to bother, right? All I have to do is just look out for the POI. Now I understand that, okay, I've seen this swing structure now. I expect this low to what? Be protected. Now I have a swing structure, a buy swing structure. Then what is my next step? To look out for my POI, my point of interest, where I expect price to come back into. Then I will have, you can see this last bearish candle that price swept. That's my QMR, right? Basically expecting price to come back into the zone, then I buy. Now I already have this anticipation again, and okay, I'm expecting that, okay, price will come back into this zone, then I will buy. Okay, now before price comes back into the zone, what do I want to look out for? The same thing over and over, the same structure on the lower time frames to sell down into the zone. Now let's see. Say I come as low as because now I already have an anticipation that, okay, price is expected to sell into the zone. What do I want to look out for? Only sells. Only sells until price gets into the zone. Yeah. Now I already have a target. I already have something I'm actually looking out for price to do, an anticipation. Yeah, let's use the 1 hour time frame and let's cut price. Let's just take out price and then boom. Now before price came into the zone, I want to look out for the same thing over and over for sales only. I want to look out for sales only, right? The sales started from here. Was there any sell entry for us? Actually, no, I can't see any that fits what I want to see, right? That fits my plan. But then within these sales, we are actually looking for sales. You can as well see your buy entries. This buy, I caught this buy, pretty sure. I caught that buy. But you're actually looking for your own sell entry, and I think I've seen one. Now remember, you're really looking for sales. You're looking for sales until price taps into this zone here. You're looking for only sales, right? It's pretty simple. You want to look out for the same thing over and over every day. Now you can see this sweep, you can see this break. You're not actually no longer bothered again, but the price is bearish, right? But now you can see another sweep of this previous high. You can see another break. Then you see another break, right? Now from here to here, where is the last high? You can obviously tell that this is the last high here. That's structural liquidity. And where is your POI? What's the closest thing to this POI here? You can see this guy that was taken out. You can decide to use the old candle itself. Decide to use the old candle itself as a POI, or the wick. And this is the wick here. That long stuff here, that's what it's called, the wick. But you can start to use the whole candle as the POI because that's the last bullish candle before this bearish movement here. Because that was the one that price swept, the one that failed here, obviously. You can start to use that one as your entry. You cover the structural liquidity of inducement liquidity, of course. And then your target, whatever your target is going to be. But you're looking for only sales until price taps into what? Your zone. I think price even did tap into this guy. Did it? No. So let's see. This call is getting too long, and I didn't really want that. But let's just see. You're just looking out for only sales until price taps into that zone here. Back to the 1 hour time frame. Now you can see this. So you can actually decide to just hold your sell until price taps into this guy. If you see the same thing again, you take the same trade. I think I can actually see the same entry here again, and it's pretty simple. What can I see here? I can see a sweep of this low. I can see a break. Now remember that type of liquidity that happens here before the break of structure. That's what we had here. That's what we had here, right? That is what we had here. And then you should have your structural liquidity. The high that was taking out the week as your entry. Now you see how you're able to build the story. You're able to understand that, okay, you're looking out for sales only until price taps into this zone. Looking out for only sales until price taps into this zone, that you start looking for buys. Now, how do you start looking for buys again? Until you see a sweep of the previous low, you see a major break, boom, a major break, and the structural liquidity, of course. Then your entry, your POI comes next, right? Your POI. It be this last guy on the 4 hour. It makes a lot of sense, but I hope I'm actually making sense. I don't want this call to be so long and then you guys don't actually get anything from it, right? I really want to make it worthwhile for you guys. But this is the whole point here. You're able to build the story, right? Understand that, okay, from the daily time frame, what am I seeing? Now, the first thing is from the weekly time frame, you're able to build a story that, okay, this is a swing structure, right? This is a sell swing structure. This is sell swing structure, right? Now you're already anticipating price to come into this zone. You have been waiting for, you're actually anticipating price to come into this zone. Now, before price comes into this zone, you need to buy, because price can't just get here all of a sudden, right? That means that price needs to buy into this zone. Now, if price needs to buy into this zone, that means you need to look for another structure to buy into this zone. Now, for price to buy into this zone again, you look for the same structure, and then you know that this is the weekly time frame. You can't just place your trade like that. You have to come lower again. On the daily time frame, you can see a swing structure again based on this sweep, this break, and you want your price to tap, because you can't just place your buy position here again, because this will be too long. It will be too much. You know, the drawdown. I mean, one candle actually takes a day. One candle takes a day to form. This is daily time frame. One candle takes one full day to form. Yeah, that means I don't have to like wait. That means this is my POI confirmed. Yeah, that means, you know, immediately price taps into this POI, I can as well just go to the 4 hour time frame to look for my confirmation entry. And what's the confirmation entry? This still the same thing: structure, liquidity, then your POI as the entry. I know one session won't actually explain all of these things, right? But this will be the only recorded session on top-down analysis. Probably our next call, I will still explain top-down analysis. But for now, I think I will just put a stop to it for now, yeah? That's going to be all for now. But then, you're able to understand that this zone, you can actually sell from where? This premium zone. This premium, yeah? That means you can still look for sales into this discount zone. And originally, this is also premium, yeah? So that means you can still look for sales into this discount zone. Then you start looking for buys after price taps into your POI. You start looking for buys and buys. Now, this is the reason why you see price came into the zone and started buying. If I show you guys my PC from February this year, I've had this POI since February. Now, to show you guys, yeah, since February, yeah, exactly. I've had this POI since, is it March? When did it form? It formed in March, yeah. I've had this POI for a very long time now, and I can tell you for a fact that I caught this sell right from here, right from this zone. I caught this sell right from this zone, right? Even this sell itself, after price took out this inducement liquidity, I caught the sell. This buys as well. You see, I've been trading GBP USD profitably since February this year. But then I will still explain again right? I think some of you don't really get it yet, and which is very much okay. I'll drop the recorded version later today. You guys can also as well go through it. Then we'll still have a session again, another session on top-down analysis. But putting it all together, I believe you guys get that now. How to put your structural, liquidity, and POI together. How to use everything to your advantage. So that means if you actually, okay, let us assume you just spot a good entry now, and you still don't understand top-down analysis yet. That means you just spot something like this now. You just spot this. You can as well just tell yourself that, okay, that makes sense. This is structural liquidity. It's a sweep, a break, structural liquidity, then your POI. Then this will be your POI, right? You will jump on the trade without thinking or without, doing any other thing, yeah? And then you have at least 60% chance of this working out without you, knowing where price is coming from. But for the betterment of your trade, right, to make your trade a little bit better and then high probability, it's a lot better to know where price is coming from. It's a very good thing to know where price is coming from. So you don't just jump on setups, on every setup, and then you end up losing money, right? But still you can, do this setup thing and all that and still make money regardless. But to just make it better, to make your trade make sense, the top-down analysis is very, very important. So that should be the end of the call, the session. Let me stop recording. But I believe you guys be able to understand. You already know how to put everything together now. The only problem you guys might still have issue with is the top-down analysis. It's very important, but I'm here for you guys anyway.